Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we'll take a look at the Canadian dollar. Since market has shown some progress and has reached the targets that we have predefined previously, and right now we need to adjust, not adjust our view, but to add some comments on what we could expect right now on the Canadian dollar. So on the daily chart, if you can see, there are two patterns that we have discussed in our weekly research. If I did not miss something, we have prepared it 3-4 weeks ago last time. And there are two major patterns were here to monitor. The first one is the butterfly, and the second one is the inner ABCD pattern. And we said that yes, our target stands at 134, but before it will be hit, maybe market will show some retracement and will retest these broken tops, right? This strong resistance area. So because as you can see, first when the market has hit the 127 extension, we said, well, maybe market will show the retracement to the 128. If you remember, there was the strong support there, this confidence on intraday charts, but then suddenly the crude oil prices have dropped miserably and market has skyrocketed higher, and right now it has hit another target, this ABCD pattern 1618 extension. So right now it has hit very significant resistance area. So market has completed two targets, and right now the retracement down is possible. What is the other reasons for this retracement? This is what will be also the weekly pivot resistance one, as you can see on the intraday charts. And as market hasn't retested this top when it has completed the butterfly, maybe it will happen right now. Another thing why this situation seems interesting, in the short-term perspective, market could give us the interesting pattern here that could trigger really deep retracement, and that pattern could be the double repo sell. So take a look. We have the very good thrust up, close below the 3x3, close above and creating the new high, and if market will show another close below the 3x3, that could mean the completion of the double repo pattern, and market really could show the deep retracement here. So that's why this situation is very interesting. There are more than just one single possibility to trade this setup. On the 4-hour time frame chart, guys, we have the butterfly that has been formed right at the top of this pattern. So if you could see, the top of the potential double repo takes the shape of the butterfly. This happens very often, and when this happens, it increases the chances that the double repo will be formed and double repo will start. So as you can see, this is also the completion point of this minor butterfly, and take a look. That is the weekly pivot resistance one, as I said. So how we could trade this? The most simple way to trade this, you could, for example, wait when the double repo will be completed. If you trade on the daily chart, you could wait when the market will close below the 3x3, and when it will confirm this double repo, and then after that you could try to take the position based on this double repo. The importance of this double repo will be also twofold. First one is direct double repos, normal double repo. If it will start to work, that's great, we will get the meaningful retracement down. But if it will fail, for example, if the crude oil prices will drop even further, and if double repo will fail, that will be also signal for us. It will be signal that there will be no retracement, and we could take the long position. Market probably will directly continue action to the 134 target. That's why the double repo has the twofold meaning for us, if it will be formed, of course. Second way how you could trade the situation: you could not trade the double repo, or you could make some kind of anticipation. For example, you could base your position you could base this position on the butterfly. since butterfly has been completed, we have the strong resistance here. You could try to take position based on this pattern, the placing stop above this. In this case, if double repo will be formed later, you will get perfect entry point here. How we could do this? So here we apply the same tactic as the calls of the Minesweeper A tactic that is specified by the Judd Napoli, as we have traded. If you remember, we traded euro currency based on this technique on Friday. That was very successful trade. We've got, based on this technique, we just got perfect entry point, if you remember. So here we'll apply the same tactic, but in the other direction, the opposite direction. There we have taken the long position on the euro currency. Here we will have to take the short. How we will act? So if we'll take a look at the hourly chart, you'll see that on the hourly chart we have the very nice looking divergence with the MACD right at the completion point of the multiple patterns, right at the resistance. That's also a good sign for the taking the bearish position. Let's take a look at the second important moment. Trend has shifted bearish, right, on the hourly chart. So as trend has shifted bearish, now we could take the position on some retracement up on this most recent swing. So now all that you need to do is just to wait for the bounce up to the 3.8 resistance or 6.18 resistance. In fact, this is really not a big deal, since this is just a 15 pips difference. And taking the short position with the stop above the top on the hourly chart, on the daily charts, and it will be the same top. Just mean I will draw the MACD predictor to take a look where trend will remain bearish till what level. So you can see any level market could show any retracement up, and the trend will remain bearish. If even market will show retracement right to the 618, stop should be placed above this top. This should be done by some reasons. First of all, because it's really not big distance. Second, because here different patterns has been finished. So we have the ABCD on the daily chart. We have the butterfly on the 4-hour time frame chart. So that's why market could show the deeper retracement here, but it should not, in fact, continue move high if it really intends to show the retracement. That's why it just will be safer to place stops above this high. As soon as market will show retracement, you will take in the position. If market starts move down, move your stop to the break even. As soon as market will pass approximately 35-40 pips to the downside, it's probably you could shift your stop, you could move your stop to the break even. That's the tactic that we offer you. So as soon as we will get the entry point on some retracement here, the second moment that you will have to watch for is the double repo. So entry is just half part of the trade, but later you will need to get the confirmation either of the double repo completion and downward action, or if market will complete double repo and it will fail, close your short position. Don't be short if you will get the double repo failure. So probably this will happen not today. That's why today our major task is the taking short position with the placing the stop above this recent highs on the daily chart, on the current highs. That will be the first stage, and later we will probably prepare another updates on the Canadian dollar. We will see how situation will develop, and there we will adjust in our view and if it will be needed, and we will just track the situation, because this setup is really interesting and it's really could give us the nice trade in the short term Canadian dollar. So let's see how it will turn.